Estate real fast. I want to thank everybody for joining us. For those of you joining us for the first time, I'm going to be your host, Aaron Jistel. I'm the broker and one of the co-founders here at ListingSpark. And what we like to talk about on this podcast is all things real estate. We typically have an emphasis on real estate investing. That makes up a big core demographic of our business here at ListingSpark. So we're always trying to bring a lot of valuable content in the form of education and insights into the real estate investing world. And so I'm extremely excited about our guest today. We've got Brandon Smith, who is a master of the world of owner financing. So we've been working with Brandon for quite some time now. So I'm really excited to have him on and just kind of talk about the ins and outs of a niche that we hear about all the time, but a lot of people are really a little bit intimidated maybe to jump in and try to sort it out because it is an alternative type of investing. So I'm going to turn it over to you, Brandon. If you could just give us a little bit of background about yourself and about how you got into real estate investing.
Yeah, Aaron. Hey, man, thanks for having me on the show today. I really appreciate it. So my name is Brandon Smith here out of Houston, Texas. And I guess really our real estate journey started in 2009. And that's when the collapse of housing was tough, and credit and capital, was really tough to get at the time. And that's how, I did not know what private money lender was or hard money lender was. I was listening to a radio show here locally in Houston, and I'm sure a lot of people know who it is, but they were talking about buying rent houses, living off the cash flow, and then retiring, when you're 50 years old or whatever it may be, because you've got all these assets. My father-in-law and mother-in-law, they kind of went through a downward spiral with the stock market, and they were looking for alternative investments. And I said, hey, I've been listening to this radio show. I said, I think we should talk to some banks and see if we can get a line of credit and maybe buy 5 or 6 rent houses and retire. Well, I actually knew, I was an old golf pro before 2009, and I actually knew one of the bank's main charter presidents. And he actually invited us in. We started a small relationship with the local community bank. We put a deposit down. We got a line of credit, and lo and behold, we went out and bought 5 rent houses on the Katy area here in Houston, good part of Houston. And the banker calls me back and goes, "Hey, Brandon, we really appreciate the relationship. These houses are rented. The first line of credit we got was about $500,000, and so we burned through that really quick because the pricing was a lot different then,
Sure.
And he calls me and goes, "Hey, Brandon, do you want another $500,000 line of credit?" I said, okay. And at the time I was working in the oil patch. We were just doing this kind of on the side, on the weekends, talking to contractors, stepping out in the middle of the breaks and whatever it was. And then from there, it just kind of snowballed. We got all the way up to about 92 rent houses, and then kind of COVID hit, so, and that's really where when COVID hit, with obviously the moratorium in place, with the rent moratorium in place, all the people that paid me were my old owner finance notes. So my company and I, we're a family-owned company. My sister-in-law is on the accounting side. My brother-in-law is the buyer of the company. My in-laws help us really put capital to work in the banks and across our platform. But owner financing, whether you do wraps or you do hard deeds like I do, there's a couple ways to do it. I'm here to help anybody that has any questions on it. I've done wraps, but currently we have banking relationships that we take our notes and securitize them against, basically.
Awesome. Okay. So obviously owner financing is a little bit more of a complicated niche. You just mentioned how most of your deals are done with hard deeds. Walk us through the mechanics of kind of how that works, how owner financing in general works, and why specifically you like this vehicle of investing.
Sure, absolutely. Well, a couple things is that, obviously creative financing is probably the woo topic that you're going to see in your Facebook post. Could be a buddy tells you about, and that's going to be, the wrap note. That's where the existing mortgage is in place. And what traditionally happens, if somebody is distressed, you say, hey, I'll take over your payments. The number one thing that you got to get if you're going to be doing a wrap note and you're going to be taking over somebody's payments is you've got to have access to their online account. So you can change the mailing address and you can change where the insurance is. Wraps are legal in Texas. Title companies do them. I think they're a little bit in the gray area, but there are title companies that will issue title insurance on it. With us, we're just more of a hard deed, true note type of situation. So when we go and close, there's a lender of record on that file, and the RMLO has been already, it's already been produced to the borrower. So they have a 64-page packet with the RMLO, and then at closing, I physically buy the note, and that's kind of where I go buy the note, and we take it to our local community bank, and it's housed there, and then we're living off the cash flow in between. And what I mean by in between is, let's say my bank, and this is in the past, not necessarily right now, but let's say I had a line of credit at 5%, and then I'm loaning money out at 10%. Well, I'm making a 5% yield there in the middle, and my note with my bank is about 20 years in amortization, and my note with my borrower is 30 years. So at the end of the note, I've got a 10-year gap that I'm going to cash flow when I'm, 20 years from now. That's an unrealized amount of cash flow at the very end.
Got it. One thing we were talking about right before we started the podcast is you have a really impressively low default rate on your owner financing deals that you're carrying. And I think that's a testament to how you qualify your buyer. So can you walk us through some of the stuff that you do to make sure you're picking the right buyer? How do you ensure that you maintain that low default rate and have these be safe investments for you?
Yeah. So just for starters, I'm non-licensed in the NMLS. I have taken the classes. I'm in the process of potentially going and getting tested on it so I can get licensed. But currently we use an RMLO. That's Texas Pride out of Dallas there. They're the ones that are actually doing the borrower underwrite and giving me the decision as a note buyer. Hey, these people will be able to pay their note. It's about matching income, assets. A lot of these folks don't have the liabilities that a true traditional borrower has. So if we can connect that the income that they're getting is going into, a traditional, whether it's a bank account or even a tax return, where we can verify the income and maybe even get an employment letter or whatever it may be, then we're able to make sure that our default rate is low. The RMLO packet's 64 pages long. So there's a lot of in-depth information that I'm able to make a decision if I want to buy the note or not, and get the house sold to the borrowers.
Yeah. What would you say is the number one reason why these buyers can't qualify for like a conventional FHA, VA, or whatever?
Well, mainly is social. Social is probably the number one. Credit history. They don't. If you come to the States, and my number one borrower, as far as if you wanted to, like an avatar type person, is somebody that's come here to the States. They have a traditional family. They're working hard. They're paying their taxes. Traditionally, they have, an I-10 type visa, or we do allow valid passports as well to close. You can close in the state of Texas with just a valid passport. But traditionally, it's going to be an I-10 borrower. Is going to be my target borrower.
Got it. Awesome. Okay. So for somebody looking to get into owner finance investing, what are kind of some of the pitfalls, the roadblocks they need to be looking out for?
Well, and it depends on there's probably two things. If you're doing a wrap, number one thing is insurance. Because if you're going to leave that if you're going to take over that mortgage in a wrap situation, and that's at a Chase Bank or whatever it may be, they have more than likely they have a due on sale clause. Now, I have not seen a due on sale clause necessarily called. I have received letters personally in my past that, we dropped the ball on an insurance premium and that we had to get it caught up and send in insurance and payment on the due on sale clause if you're doing a wrap. That's the number one thing there. As far as doing what I do, the hardest part on what I do is when we take a note, when I'm a note buyer, is having the back end long capital. You have the capital that's going to get you out. A lot of my lines of credit are 5-year. I have one line of credit at 20-year. So that's the hard part of this is stacking banks behind you to carry your paper when you go and do a deal.
Got it. Okay. And so that's where the QM qualifications become really important. So, you mentioned earlier, if you wanted to, you want to be able to sell these notes off, and having really kind of sketchy paperwork or having terms that are just kind of out of line is going to make it harder for you to sell the note, I'm assuming.
Yeah, that's correct. So obviously, back in 2009 and 2010, when we started doing owner finance in the markets, you couldn't flip a house or anything. You could rent them or you could owner finance them. We could just do a deed of trust. We close out a local title company. All is good, but all that changed with obviously Dodd-Frank compliance, and so we had a lot of shifting and changing. And actually we went away from owner finance because we were trying to figure out the laws. We were talking to our attorneys and whatever it may be. And what does that put us as a note buyer too? So I think we've got a good handle on our process. I'm happy to share that process with anybody. But the key is that you got to get them under contract. You got to be able to verify income, verify the down payment, and then get them to the RMLO so they can give you a full underwrite. So you, as the note buyer, can say, "Hey, I like this person," or it's not going to be a deal.
Yeah. Well, that's great. And I want to touch on one other point you were just hitting on the sub two. You were talking a little bit about the due on sale clause and the insurance, and I'm assuming the insurance becomes such an important component because for those of you that don't know, when there's an underlying mortgage on a property, the mortgage company is going to make sure there's insurance. And if that lapses or there's an issue there, that raises a red flag that probably pulls that file. Somebody's going to take a look at it and try to figure out what's going on. And if there's anything fishy looking on that file, they're going to start reaching out and saying what's going on. A lot of times they'll put their own insurance policy on top of it just to make sure it's covered. And that's going to be exorbitantly expensive. And I'm assuming that's kind of what you're talking about when you mean make sure the insurance is lined up correctly.
Yeah, that's 100% correct on a sub two transaction. On a hard deed, which I do, we have an escrow service out of Dallas, August REI. They handle a lot of our escrows. So the payments actually don't go to me. The borrowers will send one payment to August REI. August REI's responsibility is to break it up to P&I, insurance, and taxes, and they send me basically the net difference. And also they're responsible for making sure the taxes are paid and making sure that the insurances are caught up. And insurance is a beast. I mean, even they, from time to time, we got to huddle up and say, hey, we got to get a policy on this property. It just lapsed, or maybe the notice got lost in the mail, or it's the holidays. The insurance is a huge component, whether you're doing a hard deed or a wrap two or a sub two.
Awesome. Okay, that's great. Quick note for everybody listening in, we are going to do a live Q&A at the end. Jamie, I see your question here. We're definitely going to get to that. So if any of you guys have questions for Brandon, feel free to type them in. And here in just a bit, we're going to do a live Q&A and answer all those questions for you. So you just touched on a really key point. I wanted to talk a little bit about kind of helpful tips and tricks and tools that investors should use if they're going to get into the owner financing world. And you just touched on a really important one. So loan servicing is obviously a big deal. It's not as I understand it, it's not a requirement. You can service your own loans. You can have people send payments to you directly. But anytime that I have a client that is looking to get into owner financing, I typically recommend loan servicing, which seems to be worth every penny you're going to spend on utilizing those services, just to make sure the stuff like taxes, insurance, and tracking those payments and things like that are all in place. So can you share again who you use for loan servicing and just talk a little bit more about the importance of that?
Yeah, I think there's three major players here in Texas. I don't know about any other states, unfortunately, but there's Mills out of El Paso. They've got a good product. I have probably 20 notes with them, 20, 25 notes with them. August REI out of Dallas is a little more expensive, but I have good conversations with them. They're fast. It may be a little difficult to get on the phone necessarily, but as far as compliance and getting me emails and making sure that we're all caught up, they do a really good job. I think Moat is out of San Antonio. I don't know if they do origination or just escrow. I've never used them, so just my experiences have been with Mills and August REI. And guys, it's worth every penny now. It's getting more expensive. When I started, it was like $20, and now it was, then it went to 30, and I think we're at 40 now. There's two ways to look at it. You can have the borrower pay for it, or split it with the borrower, just to make sure your ducks are all in a row as far as compliance goes.
Yeah, it probably makes them feel better too. I would guess it legitimizes the process. It makes it feel like, okay, I'm not getting scammed here. There's a reputable company that's taking my payment I'm making every month, and they're making sure taxes are getting paid. So it's probably helping you get these deals funded as well, because I'm assuming it adds a layer of legitimacy to your deals.
Yeah, it does. I mean, August RI, you're able to go on. You can do. They can do a draft debit. They can do an online payment. I mean, it's like a small Chase Bank you're logging into, and it feels like a mortgage. And that's the way we set it up. That's the way it's designed for. And our customers get it. And the other key thing about this is that both Mills and August RI are bilingual. Obviously dealing in the space. I don't speak Spanish, unfortunately. Wish I did tremendously. But that's a key component on the whole process and the product we put out.
Sure. Let's talk a little bit, Brandon, if how you source your deals. So you mentioned you've got your brother-in-law, I believe, that helps on the acquisition side. Do you have a buy box that you're looking for? Do you try to keep it in a certain price range? What's your acquisition strategy?
Yeah, we're seller direct. We've always been, belly button to belly button. I used to be, for many years, I was a part of Big Yellow. I know they've been around. I have ups and downs. We left Home Investors probably 7 years ago, a long time ago. But basically, we do seller direct marketing. We're on TV here in Houston as well. So the inbound side, we're heavy on direct mail. Obviously, our networking, we've been around here for so long. People know that we have cash to close and can traditionally close pretty quick. So I think Pat yesterday, in the last 3 days, we've had 2 contracts come in. Just we weren't expecting, but they needed to close quick. And when you're, how I got into this is because I got within the banks. If you can set up a banking line of credit, either at a local community bank or even a hard money lender, that will be the number one first step you've got to do in order to take down a property.
Got it. Yeah, because they want to close quick, I'm assuming, and they want to.
Yeah, everybody's 2 weeks right now. I'm still at 75% in Houston as far as LTV goes. If I'm in a good qualified subdivision, if I'm in the Katy, Sugarland, Woodland, Spring, if I'm in those areas, 3.2s on bricks, I'm still at 75. I know some people have gone down to 70. If I'm in a different part of town, not so put together, or maybe it's a little speculative, maybe I'm at 70% there.
Got it. Perfect. Well, we started doing this Real Estate Real Fast podcast right at the beginning of when the market started correcting this go around. I've talked about it on a couple of different podcasts that, I got into real estate kind of 05, 06 and was working up through the last correction in 08 and 09. That's when you kind of got started in this. So you were on the heels of the big crash we had in 08. How are you adjusting to the new market? What are some things you're doing to shift gears and keep your business thriving?
Yeah, I mean, one of the beauties of owner finance is that type of borrower or that type of client really doesn't go away. They're affected a little bit by, whether it be politics, inflation, whatever it may be, but that type of demographic in my borrower, even through COVID and even through the downward spiral that we're kind of in now, my borrower is always there. It's just a matter of matching up the borrower with the right house, the right price, and the right payment. And then do they have the down payment? So that's the beauty of owner finance. Now, the kind of downslide here is that we are seeing some slowdown in obviously conventional FHA. 6 months ago when we do a listing, I would only do a listing in owner finance, but now I'm having to, bring back in conventional buyers, bring back in FHA. So we are allowing other financing in place. We used to not allow that, but now we are, just to get the houses moved.
Got it. Yeah. And I guess the nice thing about owner financing, when you're holding the paper, that in and of itself is the investment that you're looking for, right? Is the long-term portfolio of notes that you're holding on to. And so when you're doing that, you're making money on the spread, which means you can kind of withstand a little bit of short-term turbulence in the market. So even if that house's value dips down a little bit, none of us have a crystal ball, but it's pretty safe to assume that, at some point it's going to hit the bottom and come back up again and move on past where it was before. So it gives you a little bit more security knowing that in the long run, your real investment here is the paper that you're holding and the interest that you're making on that. So you don't have to get too far in the weeds about the market going up and down and things like that. Would you agree with that?
Yeah, I would agree with that. I think the hardest thing for me right now is rates. Obviously, I had a couple of my lines of credit come back up for renewal when rates have been hiked here. So that monthly payment, and we talked about affordability. Especially with you being there in Austin, affordability is getting tough. If my bank is loaning me money at 7, which is a decent commercial rate right now, I'm having to loan it back out between 11 and a half or so. Back in the day, I was getting money from my bank at 4 and a half, and I was reloaning at 9 and a quarter, 9 and a half. That monthly payment on that spread is very significant on the borrower.
Yeah. That's
the hardest thing I'm having to do with right now, is because if you've got to have the back end banks in order to carry the paper, and not all banks are going to like a consumer product, but there are a few community banks out there that once you kind of train them, once you have a history, we've been doing this since 2009, and I think we've got like 47, 48 notes right now, and about $8 million worth of paper. And once you have a history, able to sit down with the banker and really explain to him, hey, this is how we did it, this is our track record. Do you have an interest in potentially building a relationship with us?
Sure. Well, that's all great information. Anytime I'm talking to a real estate expert such as yourself, I always like to talk about what we might see here in the next 12 to 24 months. What are you predicting? Do you think we'll get any relief here within the next couple quarters, or what do you think?
Oh man, it's a crystal ball out there. Obviously rates have gone down a little bit, which has helped. I think if we can get rates, sub 6, back in the 5s, consumer confidence is slowly, in my opinion, still starting to come back a little bit. The bond market is starting to tank a little bit as well, so that's pushing rates down a little bit. I mean, who knows at this point? I do think the Fed is going to have to U-turn, and I think our next meeting is in January, so they would have had a long time since their last Fed meeting into here, and we'll see what happens, I guess. So
yeah. I think one of the major differences that we're seeing now than we saw back in 2008, we had a ton of inventory on the market in 2008 already. We were talking about this a little bit before we started, but like, for example, when I was selling houses in 2006, 2007, 120 days, 150 days on market was normal. I mean, that's just what you expected when you wanted to go sell your house. It was going to take you 3, 4, 5, 6 months, and that was a balanced market, and that was normal. And people were completely fine paying 6.5% interest. Now, the difference back then was homes were more affordable. They were, a third of what they are now. So that's kind of the big factor that we're in right now. I think what people are doing right now is they're keeping inventory down, because right now, if you're sitting on a 3 to 4% interest rate and you don't have to move, you're not moving, and you got equity. And unless you're in an could be a emergency life event, could be a divorce, could be a job relocation. Those are really the majority of the houses that we're seeing hit the market. Or you've got Opendoor who's trying to purge all their inventory they've got and losing a ton of money in the process. So the inventory that's on the market right now, I feel like is only the houses that really have to be there. And I think that is helping keep values from just completely bottoming out, which is what we saw back then, because there was so much inventory. People had to get out of their houses. There was no equity. Nobody had any money, because, a lot of times when they bought the house, they paid 103% for it because they rolled all of their closing costs into their loan. And so when you're not making any money, what do you care what you sell your house for? They're doing short sales like crazy. Now, I think everybody is really more cognizant of what their interest rate is, waiting to get some more confidence in the market so they can feel good about their next purchase. So I think that's keeping inventory a little bit lower than what it was back then. And I'm really hoping the Fed in their meeting in January sees that they've done their job and curbing inflation, and everybody is feeling the pain, especially in the real estate industry, and they'll start to ease up and we'll see rates fall. And I think once that starts to happen, I think we've got a lot of pent up demand that we'll start to see coming back into the marketplace, whether that's buyers looking to buy, sellers looking to sell. So I'm hoping we get some signs of life early next year. None of us know exactly what's going to happen, but I've talked to quite a bit of smart people, and that seems to be the sentiment of at least what's possible. So hoping for good news, kind of turn first of the year. I will say this to a lot of our sellers that are selling right now. It's slowed down a lot. Seasonally, we slow down this time of the year as well, but people need to really be taking a look at the microeconomics of their market and understanding what else is on the market, because buyers are still out there. Buyers are still relocating to Houston and Dallas and Austin and San Antonio. Everybody's still got to have a place to live. So houses are still selling, stuff is still moving. It's just happening differently than it was a year ago. Well, awesome. Well, I think this is a great time. Brandon, let's jump into a couple questions. So Jamie, I really appreciate your patience. Hopefully you're still there. Jamie asked, can you share the banks that you use that will back up the notes? Thanks in advance.
Yeah, that's $1 million question. That's a loaded weapon. How about this? I'll share my capital broker with you, Aaron. Could I do that on the side? Is that possible?
Sure. Yeah. Yeah. Anybody can reach out and we can get it.
Yeah. So just so you guys know, a capital broker is somebody that goes out and helps establish lines of credit for a small fee. Okay. I really enjoy using a capital broker. I used to go, knocking on bank doors left and right. I've knocked on almost every door here in Houston. I feel like it that way, even though I probably haven't, on small community banks. And that's how we raised our first capital for many, many years. And then I got into another space of using a capital broker that can come in and specifically sit down a line of credit that I need for my owner finance notes. And there is a fee on that, but it's worth every penny. So I'll share that name with Aaron here once we jump off the podcast, and he can probably put that out for publishing.
Well, and I think your answer sheds a lot of light on it, and doesn't necessarily have to be the specific bank, but I think you gave a good answer on the type of bank that you're looking for. So it's not necessarily your Chase or your Wells Fargo of the world. There's a lot of small local community banks that make a lot of their money doing different types of alternative lending. And I think you mentioned it at the very beginning that you started out with a $500,000 line of credit. You did right by the bank. You deployed that capital in a way that you were seeing a return for yourself. You were making your payments. You became a very trustworthy borrower. And then once that happens, banks are in the business of lending money. They want to do that to the people that are going to pay back the loans. So I think the strategy that I've seen that's worked from other friends of mine that are in the investing world is, you don't always have to start with this, $5-10 million line of credit. Start out with enough to get one or two deals and show that you're a competent operator in this space, and pay those loans back. And then typically, once those banks feel like you're a safe borrower, they're going to be knocking on your door. Like you said, that banker called you up and said, hey, can we give you another $500K? That's like the dream scenario, I would assume. But that stuff happens. It's their job to take that money and deploy it and then earn interest on that money. And so they're looking for people to lend to that are going to be safe and pay that money back. So I think there's no easy answer. Make connections, network. In real estate, your net worth is your network. We've heard that saying a lot, but it's absolutely true. So just start pounding the pavement, knock on doors, build connections. And let me ask you this, Brent, have you ever gone out and do you know of anybody else that's found a good source of lending through either networking groups or anything else, to where it's maybe private capital from an individual that's looking to loan money out of their own? Maybe it's an IRA, maybe it's some other investment vehicle that they're looking to lend on.
Yeah, the IRA money is there and it does work. I have a lot of stuff. I have a lot of private investors, and we still take on private investors to this day, mainly on the front side of projects to rehab them. But also, and we use a lot of people through Quest IRA, which is obviously here in Houston, one of the largest IRA firms out there. They do a fantastic job. But But going back to your original question about banks and maybe capital, when you go and knock on these banks, you're going to have either a strong W-2 or a strong capital commitment behind you. I mean, if you walk in and you got $5 to your name and you don't have a job, I mean, nobody's going to listen to you. Okay.
Right.
But if you have somebody, let's say you partner with the guy that maybe he has $200,000 in his IRA and you guys partner up, maybe he deploys that into the bank and then you run the rehab, you run the flip, and then you take the note on the backside and build a relationship that way. So we use private capital not only just to buy the houses and flip them, but we also use private capital to put them in depositories in the banks. So
yeah. And for those of you guys that aren't aware, so Quest IRA really specializes in self-directed IRAs that you can do other creative things that you might not be able to do in a more traditional IRA or a 401k or things like that. And one of the things they specialize in is utilizing real estate as a way to invest out of your IRA. And so never a bad idea to build relationships over at Quest. And there's a lot of people over there with a good amount of cash sitting in an account that's looking to find somebody to lend it to. And so that's a great way for you to find private investments as well. We have a lot of clients that use their own IRAs. They lend out of them. They do a combination of both. They partner. And so finding good networks is a great way for anybody to start building relationships and find capital. Brandon, I think you probably agree with me that you find a good enough deal, you're always going to be able to find the money if you're looking hard enough. That's typically the way it works.
Yeah, absolutely. I mean, especially on the front side. If you're going to do owner finance, I mean, the backside, whether you use a capital broker or have a banking relationship, that's the harder money to find long term. You know, all the front end stuff, go ahead and take it down. Always buy. I mean, when I was in 2009, when the market was on the downward slope, you know, I could have bought all of North Katy and I didn't do it because I didn't have enough money. You know, and now I'm kicking myself in the pants.
Sure.
You know,
Sure.
So I don't want to miss an opportunity in today's market and be 2 years down the road and say, hey, look, you know, 2022, I missed out. You know, we're not going to do the same thing again.
Yeah, absolutely. Did you go through any educational classes or anything to start learning the ropes when it came to owner financing, or how did you really feel confident about it?
Yeah, no. Obviously, Mitch Stevens out of San Antonio. If you know anything about Texas-based owner finance, he's got a ton of books. He's active on Facebook. But more importantly, you just got to be able to do the deal, understand the structure, work with your title company that will do an owner finance transaction. And, you know, there's other sources of material out there. I'm available. There's other people that have a strong track record. But like I said, Mitch Stevens out of San Antonio had a ton of stuff out there. That's kind of where I got my nuts and bolts at, you know, starting out in owner finance.
Yeah, Mitch is awesome. I was actually on his podcast a few years ago, and so I felt very fortunate. That was probably 4 or 5 years ago. So he had worked with us at ListingSpark a little bit, and he had some clients using us. So I had the benefit of going on to his podcast as well. He's a sharp cat, man. He's I think his book's something like How I Bought 1,000 Doors or something like that. He's got a great book that talks a lot about it. That's his niche. And so, definitely look up Mitch Stevens if you haven't heard about him. He's a great resource. Very interesting character and knows the investment world inside and out. So,
and then I need to also speak Eddie Speed as well. Eddie and we've done some masterminding in the past. So that's another name I would probably throw out there as a book reference. You know, Eddie's more on the creative side. I know he likes the raps, and, you know, I think Mitch is a little more, Mitch can do raps, but he also can take down the note because he's got capital. It just depends on if you got the capital or not to hold it long term.
Sure. Well, we'll give another minute or so if anybody else wants to chime in with any other questions. This was awesome. For those of you who maybe started late into the podcast, we do publish these on Apple Podcasts and Spotify, so you can always tune in later. We appreciate everybody who's joining us. Brandon, I wanted to give you the opportunity for anybody that maybe wants to get a hold of you and talk shop about deals or anything else. What's the best way for people to find you or check out your website?
Yeah, you can find us at ownerfinancinghouston.com. or you can also, our front end home buying company is Priority House Buyers. You can, either of those websites, you can put in your information and be able to get a hold of me one way or the other. So that's probably the best way to get in contact, and we could schedule a courtesy call or whatever it may be. My office is on the north side of Houston, so, but I live out in Katy, so a little bit of a hike, but we'll see if we can help out anyway.
Awesome. Awesome. And if you guys didn't catch that, feel free to reach out to us. You can go to ListingSpark.com. You can chat in, you can send us an email, and we'll get you guys connected with Brandon. So yeah, if you got any deals, the one thing, a lot of our network and a lot of our listeners do wholesale real estate as well. And so if you've got deals that look like they could be a good fit for somebody wanting to do owner financing, I'm sure Brandon would love to get in contact with you guys as well. So
absolutely. I mean, we're always looking for houses. We love networking. If you're a wholesaler, let us know. You know, we've been around a long time. We can close in about 2 weeks typically.
Awesome. Awesome. Okay. We got a question. Isabel asked, can you share the link to the podcast, please? Yes. So that's great. So anybody that actually registered to listen into the podcast, if you haven't registered, you should be able to just click the link wherever you're watching, and it'll actually send you guys out a copy of the final podcast to watch as well. And then just find us on social media. You can find us on Facebook, Instagram. We've got some videos out on TikTok. Or you can just go to our website at ListingSpark.com, and under the resources tab, we have our blog. So one of the nice things about some of the software we use is we transcribe all of our podcasts into a blog post as well, and we share the link on there. So check us out on the website. It takes us a day or so to get everything uploaded, but you can find it there. And then if you just look in the chat, we got a link to Spotify as well. So if you missed anything, don't worry. We'll be able to share it with you later. Well, cool. Well, if there's no other questions for Brandon, I really appreciate your time. This was awesome. I know owner financing is, for a lot of people, it can be a little bit scary. It's a little bit unorthodox. Obviously, it's a longer term play, which I think in real estate investing can be a little bit scary. But I think you're a proof point that it is a great way to build long-term wealth. It's a great way to set up a nest egg, and there's multiple exit strategies. Obviously, if you do it the right way, you don't have to hold on to the note forever. You can sell the note. There's different ways to get in and out. Thanks, Brandon, for joining us. I really appreciate your time. And everybody, thank you again. This was episode 9 of Real Estate Real Fast. We typically come back Wednesdays at 1 o'clock. We've got some great guests lined up in the future, so hopefully you'll stay tuned, and we'll be keeping you posted of new episodes to come. Thanks again, Brandon.
All right. Thanks, Aaron, so much, and ListingSpark for all you guys do. Thank you.